This week in the markets, we're taking a look at the WASDE report and the ongoing cattle shortage. Markets closed last week still on the upswing with a few exceptions. Let's take a look. Last week's biggest loss, lumber down about $76. It's followed by lean hogs at nearly 3¼ cents. That's after a 3-week steady rise. Seems hogs have seen a peak for now. Last week's biggest gain, wheat up 32¼ cents. That's a 4.26% rise from the previous week. So, this month's WASDE report dropped last week, and as usual, it showed us some interesting developments. These USDA numbers help us see what's both going on domestically and globally. Here's what it said.
U.S. wheat supply and demand outlook is mostly unchanged from last month. Food use down 2 million bushels. Seed use raised 1 million bushels. Exports unchanged. Ending stocks up 1 million bushels. Season average farm price $9 per bushel. Global wheat supplies up 2.4 million tons, mostly on higher production from Australia and Russia. Consumption up 1.4 million tons, mostly on higher feed and residual use. Trade up 1.3 million tons. Ending stocks raised 0.9 million tons. U.S. corn outlook shows corn used for ethanol down 25 million bushels. Ending stocks up 25 million bushels. Season average farm price unchanged at $6.70 per bushel. Global corn production down, mostly due to less area and yield for Argentina. Exports and imports both up. Ending stocks down 1.1 million tons. U.S. rice imports down 3 million hundredweight. Imports are at a record high while supplies are lowest since 2003 and 4. Exports down 4 million hundredweight. Ending stocks up 1 million hundredweight. Season average farm price $19.40 per hundredweight. Global rice supplies up 0.2 million tons. Total trade down 0.3 million tons. India's exports raised 1 million tons. Vietnam's 0.6 million tons down. Global consumption up 1.1 million tons. Ending stocks down 0.9 million tons. U.S. soybean crush down 15 million bushels. Exports unchanged. Ending stocks up 15 million bushels. Season average farm price $14.30 per bushel. Global soybean production down 5 million tons on lower crops for Argentina and Ukraine. Exports mostly unchanged. Imports up for Argentina and down for the EU. Crush down 3.4 million tons. Ending stocks also down by 1.5 million tons. U.S. red meat and poultry production shows higher beef and slaughter, offset by lower carcass weights. Lower cattle herd means less beef produced. Pork, poultry, and egg production down. Turkey production unchanged. U.S. milk production lower due to lower milk prices and smaller herd. Imports raised. Prices lowered for cheese, non-fat dry milk, and whey, while butter prices unchanged. All milk price forecast $20.70 per hundredweight. U.S. cotton mill use down 100,000 bales. Upland cotton average farm price 83 cents per pound. Global cotton ending stocks down 850,000 bales. India's crop down 1 million bales. China's crop up 500,000 bales. World consumption down 200,000 bales, and world trade projected 1.3 million bales down.
So, according to Tyler Schau from agmarket.net, the 3 biggest things to take away from this month's WASDE report have to do with row crops. Specifically, soybean crush down by 15 million bushels from last month. Globally, Argentina's soybean crop was cut by 4.5 million tons due to ongoing dry conditions. On the corn side, corn used for ethanol dropped by 25 million bushels, which is a 1.4% drop year over year. So these past 2 weeks, we've talked about our shrinking cattle herd in the U.S. This has happened before, so it's not a crisis, but it is a concern considering beef prices. I recently spoke with MSU livestock economist Josh Maples to get a better picture of the situation. So the cattle market seems to be in quite a bit of turmoil this year. What are your expectations this coming year and the future?
I'm pretty optimistic on cattle prices, really. I mean, I would say 2023 is going to be less turmoil than we saw the last couple of years. Of course, the troubles in 2020 and 2021, really wild swings in production and in prices. 2022 was a bit more of a transition year. You know, cattle prices steadily increased. We've worked ourselves into pretty current supplies on feedlot cattle numbers. This year, the story is going to be tighter supplies, and so my projection for this next quarter and really for most of 2023 are some stronger prices, significantly stronger prices than we saw in 2021 and 2022. We're starting this year with cattle prices that we haven't seen since 2015, and I'm projecting that primarily driven by supply, but also that the fact that beef demand's been relatively strong, projecting some much stronger prices this year.
You brought that up earlier, yeah, how demand has pretty much stayed the same. It hasn't gone down despite the amount of beef cattle going down. And as we know, if demand stays the same, supplies get low, that equals higher prices. So do you think that beef demand is going to go down at some point, or do you think the prices are going to find a nice even medium so people will still keep that demand?
Yeah, that's a tricky question, and beef demand is so complex because we see people swapping within beef. Your demand can be different for various beef products, and so trying to project that out or even think about beef demand really requires us to kind of think about both the prices that people are paying and how much they're consuming. And 2021, 2022, 2 years that we saw some sharply higher beef prices, especially 2021 is when we were seeing the big run up. But people were still buying a lot of beef. And, 2021 in particular was a really strong beef demand year, even with those higher prices. 2022 was a little flatter. We saw retail prices didn't change all that much throughout the year. They declined just a little bit. But ultimately, I think I would still call beef demand strong, and we're projecting beef supplies to be pretty significantly lower in 2023 than they were a year ago. So those two pieces together make me pretty optimistic for cattle prices, because I think beef demand is still there and we're going to see some tighter supplies.
Well, if there was one piece of advice that you could give to cattle producers in this state and nationwide for that matter, what would that advice be?
So my advice right now is pretty simple, and it's to take advantage of the low-cost feedstuffs that you have, if you have any, because it's hard to find anywhere in the country. We've gone through periods of drought. Hay prices are really high. If you have access to low-cost feedstuff, whether it be some kind of winter forage or whether it be anything else that you have, if you're able to take advantage of that and potentially even add to your herd. So, replacement cows, replacement heifers are still relatively cheap compared to where they have been, especially where they were in 2014, 2015. With the current outlook of some much stronger prices this year and next year, we could be back in a position where we're going to want to be expanding, we're going to want to be producing more calves. And if we can do that with replacements or with heifers that we've either held back on our own or that we've purchased kind of before those higher prices come around, we'll be sitting in a better position. But again, it only makes sense if you can do it in a cost-effective way.
And that's it for a deeper look at the markets. Looks like we have some good news on the horizon despite rising food prices. It seems we'll weather this storm like so many others.